Good Tuesday evening, folks. It was nice to have a 3-day weekend away from the markets. However, we came back with a bit of a vengeance today. We could see it coming on Friday, but the markets pulled back a little bit. I think we might be in for a little bit more, and we'll go here from here. It is Tuesday, June 20th, 2023, and this is precisealgorithmtrading.com, and let's go through the markets. So this is the S&P 500. These are now this white line here is a channel line, but it's showing the um, highest high in I think 252 periods, which is approximately a year. Um, I might have even programmed it for a 52-week high, but I'm pretty sure I did 252 periods. So it may not be a perfect indication of a year, but it's pretty dang close. And um, if you see a number, which I don't know if I could pull that up anywhere close. If you see a number actually pop up in Thinkorswim on one of the candles at the highs, that would be the all-time high. And if we see one of these, maybe I don't think it's in any of these, but there you go, like right there. Uh, this is Amerisource Bergen, and that 52-week high happens to also be the all-time high. That's why it pops up like that. So those are important numbers to kind of wrap your head around when you're trying to evaluate markets and follow where the money is going. So the S&P went down today by a little under 0.5%. Still green, and all this stuff looks way overbought to me. And by the way, I've swapped out the on the RMO indicator that I've been messing with just a standard MACD. It's sort of standard. I've colored it up my own way, and I put the buy and sell signals on here. Actually, I've messed with the MACD. I've been doing this almost 20 years, and I've messed with the MACD since pretty much day one. However, I know a lot more nowadays, and actually just throwing up a standard MACD on here um, with the right colors and stuff like that, I think it's actually it's worthwhile again. For a long time, I didn't understand what moved price, and now I kind of do. So uh, I think it's helpful. I might use it in my arsenal. If nothing else, it's just something else to look at and give some confirming signals, and you can actually see when you see something that's not confirming as well. It would be possibly throwing the market in the other direction and maybe an early warning. So, all right, so that's the S&P, and we're obviously, I think we hit that target over here on the left-hand side. By the way, I'm going to try to I don't know if it's going to let me. Yeah, so I'm going to try to use a marker and see if that helps going forward. This Thinkorswim lets you, it's got crosshairs, but it's on both charts, so it's a little bit messy. But like literally, if I go pick the toolbar and I'm talking about these target dots, so this is the weekly chart, W right there. This is the daily chart. So using the marker tool might help a little bit to point you guys in the right direction of what I'm actually talking about. Um, so like this candle, I think right there, because it has the arrow on it, produced these target dots. Well, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 or so weeks ago. And there you can see we either hit that high target or we got really close. So these targets are, I'm never going to say they're going to be perfect because they're based off of math. Maybe you just get close, and close should be good enough. So if you're actually trying to hit a target, you might want to put it underneath the dot. If you're actually going to use automatic, like, hey, if the price gets to that, I want to like sell out so I can collect my profit, as opposed to, you know, that there's a saying in the markets. It doesn't matter how much you make; it matters how much you keep. So when I talk about the dotted lines, it's this dotted line right here. That's two standard deviations away from where the price started that week. And so you can see really clearly here, this is the beginning. This is, well, it's Tuesday, but um, that's today's candle on the S&P 500. This is one standard deviation away from price. This is two standard deviations away from price. And this is 1.5. It's the blue line. So and then I project out into next week even. So that's why we got this going on. And does that help? You can sell against those levels if you know if you know how to sell against for premium. Sell verticals and things like that. You can also establish potential iron condors. So there's all sorts of mechanisms you can use in the markets. Enough about that. Let's move on. This is the Dow Jones Industrial Average. And you can see we were walking up this line, and now we've pulled back 2 days in a row. It looks like a hard day pullback, but all we're really doing is I mean, here, let's highlight again just because this is fun. um, this is still moving up. These are still moving up. This is still moving up. This white line here, by the way, is really just the closing price. So it's a moving average of 1, and you can see that um, these moving averages are moving away from each other. Well, that's good. And this has pulled back into it. So I mean, typically you got to pull back into it before you can go higher. I'm not saying that's what we're doing, but that's where the direction is right now. And you can see over here on the weekly chart that you got a buy indication. You got an older buy indication here. You got an older buy indication here. Um, we got target dots to the upside. So really, there's nothing to be too worried about, even after a day of minus 245 points on the Dow Jones. It's the kind of thing that rattles people, and it makes people want to. It makes them shake out of a position, and that's really what the market's job is to get people out of their position. I'm not going to pull up the RUT. I'm going to pull up the IWM because it's the same as the Russell, and you can see that the Russell. This is the RUT right here. It actually zeroes out every night after, I think it's probably 8 o'clock Eastern Standard. Drives me crazy because I can't see that, the actual IWM here. The IWM, I can't tell what it did today. Did it go up or down? I think it went down just a hair, but there you go, down 0.44%. So it doesn't zero out. That got away from me. Um, but again, now there's something to be said about this. So that right here, we got two dark blue candles in a row, and these two lines are coming together. So these two lines are still pretty well apart. But if this crosses here to the downside and turns red and goes down, well, that's the beginning of what that was, and you can follow what happened after that. Maybe it's not the end of the world. Maybe we come to this level. Maybe we come all the way down to this level. This 50% right here is kind of a big deal, because I think if we get past that 50% level on a closing basis, this market will want to come all the way down here and possibly even further back into this zone, which, there wouldn't be anything constructive about that. Moving on. So that was technically the Russell, and then the Nasdaq pulled back 0.16% today, which is hardly anything. Um, Everything here still looks pretty up. Although again, we could get a pullback in one standard deviation to this level here without really shaking anything up structurally from what this trend looks like. This trend is up. So things are looking pretty still. I mean, today would look like it was rough, but um, things are looking still pretty bullish. The oil, I think it pulled back hard today. Nope, it actually pulled back hard at some point during the day, and then it closed up higher, forming what looks like a hammer candlestick. So, and that is a buy signal on the daily chart. However, it is a sell signal on the weekly chart. So if you're going to play this long, you've got to be nimble and be willing to get in and get it right back out again if this thing was to roll over and die. However, I am going to put an alert right here. As soon as it cooperates. If it cooperates, computers got to love them. Alright, driving me nuts. There we go. Create. Lord. Create alert. At or above. Create. And actually, I'll even throw one in for create alert at or below. That way I can just take a look at it at any time I get back to my desk and say, hey, do I still want to get in this because it's a new buy signal today? And it's in the face of, here, I'm going to go highlight again. This is the buy signal that goes with this, and technically what came pop the other day. However, this is all red, so and this is red over here. So we're doing that in the face of, I mean, a larger time frame is still bearish. However, if this was to take off and maybe even get up here past these, this is the gold line and the blue line that I talk about, that could be on a closing basis on the month, could end up being a longer term buy signal. You can see here we were up above here for this month, and then it closed below those lines, so that buy signal was negated when it closed right there, and then it never made it up here above that for that month. And really, it's this level up here that you need to care about for a closing basis. But if this thing was to take off and get up here by the end of the month, which is totally possible, then that could be a longer term buy signal for oil itself and possibly the energy market, or at least a leading indicator for the energy market. And I'm going to flip over to here and show you a little cheater that I've got that I kind of like. So this is the daily chart on the left and the hourly chart on the right, and the daily chart's actually throwing up parabolic channels of that look like they want to go up. So this actually lends, this is math again, where yeah, we're going down on the hourly chart, but if we break to the higher side here, this parabola will switch up and it'll go along with the daily, and you can see that literally it's off the chart here, but by 7.5 we would be probably at 66 and a little farther up. So let's call it the second week of July, we could get up to this upper dot, and that upper dot is inside of 3 average true ranges higher from where the price is now. So throw you a little bit there. It lends credibility to the potential for that trade to actually work out. And I guess I'll look at one more of these since we're here. The transports pulled back quite a bit today. That white line up there is the 52-week high. So, and then we have a squeeze. Play with my highlighter tool again. This is the squeeze. It's these dots. We had one here, and you can see when it fires, it takes off, or it has a potential to take off like this. While over here on the weekly chart, we haven't fired yet, so we could take off on the weekly basis quite a bit. But I expect a pullback and some struggle before we ever get to there. So just that's the nature of the markets. And then TLT is bonds. We're in bonds, and I actually wanted to lay into this a little bit more today, and I think something got in the way, so I did not. But I've got a decent position on for this, and it's kind of flies in the face of the. I mean, it's different than the stock market, so it also hedges me a little bit in the other direction. But it's the same signals, guys. Same stuff. Let's flip over here, and I'll try to get this done quick. The internals, I use the bullish percent indexes and stockcharts.com. The industrials, this is important when the markets moved as hard as they did in price. The industrials didn't move today. The NYA moved down by 0.83%, so not much. The transports didn't move today. The NASDAQ moved down by only 0.25%. The SPX moved down by 0.94%. The OEX, the S&P 100, was flat, and the NDX moved down by 2.78%. So really nothing too out of the ordinary there. Nothing like, hey, the market's just going to roll over and die. It can. Market can do anything at once, anytime. But from the internals, it's not near as volatile looking as it felt today. And then finally, our automatic trading systems. And I think I can scribble on this as well with our highlighter tool. This is the YM, which I think you guys can see that when I do that. And this is really the price action here today, was this little spike. And I was thinking, talking to some folks about how this works, and it's like, well, why would you want to trade this if it's got this much volatility? And I'm looking for this and that to be the lows, and the try to maintain higher lows. And then these green dots, those are new equity peaks, and we haven't had one for a while on the YM. But if you look at, like, you could say, why do we want to do this? Because this is 1210 to 620. Well, if you look at a whole year's worth of data, I mean, this is pretty sideways from there to there. But I am looking to get this going again when this decides to get going. And the math behind these moves, it should, I can't say will, because I guess anything could happen, but it literally should start to do that again one of these days, because this math will repeat itself over and over again. It repeated itself during all of this. It's all the same math. So anyways, that's the idea behind it. And then literally, like this section here, I've pointed it out before, these are individual trades, And this one hasn't been great lately. It's a lot of back and forth with a lot of red painted, but even still, if you look at this, that trade right there, it's the biggest one on the screen and it's a winner. The biggest loser to compare against is this one, which is probably like a max loss situation when my stops take over. And then we'll move over here. This is the Russell, and we had a nice little, probably one trade there today. But it's the same thing. If you look at this on a 6-month or a year-long basis, I mean, it's, that's a nice uptrending equity curve. And lately, a lot of back and forth, but still, whoops, I'll just use that trade, $3,700. This trade, $6,500 versus the worst trade on the screen here. I think. Well, no, here's one, $2,300, $2,500. Oh, there's 3,000. So I mean, you can see that the winners are still, they outpace the losers, and that's the whole point. That's what makes a equity curve go higher. So, and then last but not least, our Nasdaq, which is still the winner of, it's the one that wins most consistently. And we got new equity peaks today, which is pretty cool. This is what it looks like on a year-long basis. And this one's what I really wish they all looked like all the time, which is more black than red. And even still, so there's a $4,000 winner, a $2,600 loser, with a $2,100 winner and an $1,800 winner, all stacked up next to each other, with some little things in between. So you've got to be able to take the volatility, folks. You got to be able to take the losers with the winners, and sometimes it's hard, but other days it's great. This move up here has been pretty phenomenal here lately. It's not much different than that one. And again, you can see them happen, through the last year's worth of history that shows up here on the equity curve. So that's how it works. Hope it helps. And sorry it took a little bit too long tonight, but yeah, I thought it was fun to play with this. So have a great night, and we'll see you guys tomorrow.